All right, now I must say I messed up. That video I did, I recorded the trade journal under the pre-market Pulsewave report Sunday edition. So that that last live I just did is going to be renamed and it's going to be posted where it needs to be posted for our subscribers. And this here is the real video for the pre-market Pulsewave report. What can I say? I messed up, but lucky that we have Frank the Magnificent to fix it all and make it all better. All right, so here we are with our charts. All right, so here is the US dollar. So here's how the dollar finished on the week, strong and near the highs of the week, hitting a new weekly high. Market closed above 103, which is just amazing. So where do we go from here? Where else? Up. Speaking of up, for those that want to benefit from what the US dollar is doing without having to trade Forex, well, here you go. You don't need to trade Forex and futures. Just buy ticker UUP, which is the ETF for the US dollar. Here it is right here, right in your face. Everything you could ever want to trade and know about it is right here. Not a problem. And as you can see, the market is giving you constant upside production ever since it started. So it's just keeps on going. Now UUP, the high was the bar on the week that ended March the 20th of 2020. So 2 years ago is where it hit that high of $28.90, and here we are at $27.57. So not too much further to go before testing and taking out those previous highs. All right, now here is Nvidia. Nvidia has been in the news because it's like the world's largest chip manufacturer. And as you can see here, not only is it a bear market with the red grizzly bear, but it's giving you that accelerated downside. And we keep hitting weekly lows, and the market is falling out of the Kumo cloud on the weekly chart. So this thing is just crashing and burning, trying to find a bottom. And so far, there is none. As far as crude oil is concerned, well, crude oil had that nice run up, and now it is now reversing, and it's doing what it does, which is become gangster. So right after you hit a weekly high, the following week, we just finished, we hit a new weekly low. And it looks like the market is officially starting a corrective mode to start the week off. Now, could it always relock back in? Of course it could. But remember, OIH has gaps in it. And when it does, those gaps have to be reconciled. So on this weekly chart, I think the top of the Kumo cloud down here around the $200-ish mark should suffice. And that's a $63 drop from here. Ouch. Next up is the Qqq Nasdaq 100 ETF, also ending the week with a new weekly low. And we have a little baby bear that is trying to grow up, increasing selling pressure, extending out further. So I think this is just the beginning of the market correction. Taking a look at semiconductors. Can't have industry without semiconductors. Well, new weekly low and increasing selling momentum to the downside. And this one's threatening to fall outside the Kumo cloud and fall off of the cliff. He said, why is Theta weekly buy support so high? I have no idea, but we'll get to the Theta in just a second. Let's see here. Where are we? Let me pull it up for you. All right, let me switch it over to daily chart because that one, the monthly's not working. Okay, well, according to here, Theta has pretty much hit another weekly low as well, and is threatening to collapse below $2. So that's why it's looking like that, my man. That's why it's looking like that. It's crazy, I know, but markets will be markets, right? So we got to take what we can get and just let the markets lead us. As far as the S&P 500, this ticker is SPY. See the new weekly low here? It's extending out. This is becoming more of a mature bear. Selling pressure is increasing, and this is what we can expect, more downside production. That's why we do what we do, because we know that these markets are going to continue to do what they do. They bounce around, they act a little silly, but they give you, opportunity to do what it is you need to do. And in this case, you see that the market is allowing for the pop and drop. So you have this pop off the support lows, bears come in, smash it right down. So the market's doing exactly as we anticipate on that regard. Now, as far as bonds are concerned, here's Berry bonds. As you can see, bonds are falling and they are not stopping. They're gaining downside momentum. You're in the green zone, but this correction has extended out and is getting problematic on the weekly. Looks like the market is setting up for another major leg down this week, which is crazy. Now, I hear you. I hear you, Troy. No problem. I dig you, man. As far as the oil is concerned, yeah, I mean, it depends on how long this thing drags out and just how much the supply is crunched versus how the demand is going to be met. Now, you can move around a lot of pieces on the chessboard. For those that are not looking at the live, Troy in the live is asking, he says he remembers a few years back when I predicted oil at around $400 a barrel. And I'm still holding to that. Now, I didn't know anything about a war back then. I was just going by what I saw as far as, in the price action. But yeah, now we have a war. So yeah, oil could probably exceed that. There's no limit. Remember this, when we're talking about any market, I don't care what the market is. I don't care if it's Microsoft or if it's chocolate chip cookies. If the demand becomes, wild enough and the supply becomes constrained enough, then there is no limit to where prices can go. Prices can go to infinity. Always remember that. Price can go to infinity. Doesn't even matter. All right. So, yeah, oil could go to levels that we would not even believe. And if that happens, well, you want to own some. That's why you need the pulse waves. The pulse wave report does have information on the ticker OIH and XLE, and DIG. So you may want to take a look at those. All right, so this bonds looks like it's about to put in a new weekly low. You see, this is getting this correction is becoming more pronounced, and it could. You see the bull in the bottom right hand corner shrinking. It went from a big old full blown bull to now a little teeny microscopic baby bull. That's because these bears are really galloping, and we may get so bad that we turn into a bear market in the bonds. So that's what this is about. All right, so next up we got nat gas. Now nat gas has been on a tear as well. All right, but we got a bear here, bottom right hand side bear. I think this here is news driven, and because of the war, we have a war premium in the market now, and we're on the weekly, we got a rally alert saying that we're expecting the market to possibly explode. We got a bearish pointer here, so maybe UNG is a buy this week. We'll have to see. Let's flip it over to the daily. I'm curious. On the daily, okay, so on the daily, we had a crash alert on Thursday for Friday's trading. We got no downside production, but this is definitely under a watch because of the correction that the market's been in. Doesn't mean it can't still go higher. It just means that the market is wavering a little bit. But I think this is all, excuse me, due to news events. So we'll see what happens. I could be wrong, right? All right, here is the Bitcoin futures. So as we know, Bitcoin continued to move. It's Friday's session still ongoing until 6 o'clock this evening, between 6 and 7. Some even they can stretch to 8 o'clock. But between 6 and 8, we'll have a better idea. So on the weekly, we got a rally alert for the Bitcoin. It looks like the market wants to try to get back up inside that Kumo cloud. It did dip down here prematurely, and it has a habit of doing that, dipping down for a day or two, only to come back up, dipping down for a week or two, coming back up. So I think this one is on the upside. The last rally alert gave you that upside production. The last one before that gave us upside production. And now we have another one. So I think that we have upside production that can be coming here. All right, let's see here. The next one is the Ethereum Futures. And just like the Bitcoin, we were looking for the top of that. On the weekly low, it stands that we probably will dip first. On the daily, it's a little bit different. Flat, but it does have some increasing buying. So the bulls are trying to defend at the top of the Kumo cloud here. So this one can be interesting as well. All right, next up, we got the Euro Yen, which is the proxy for the S&P 500. And on the weekly, we got a crash alert for this week. Looks like the market's going to give some back and possibly fall back into the Kumo cloud. That can be several hundred pips in the making. We shall see on that one. All right, now the next up is XRP Ripple. And as you can see here, XRP Ripple is giving us a red bar to start the week off. So we're thinking that this market wants to relock in on the bear side of things and test the support of the market. So to start the week off, looks like we'll be dipping in XRP Ripple. ADA Cardano, kind of looking the same. We put a new weekly low in on this one. And this one is in a corrective state. So we do have a crash alert to start the week off here on ADA Cardano. As far as Litecoin is concerned, that one looks like it's about to fall out of bed. Also increasing sneaky selling pressure, extending the bear market scenario out. And this is just the beginning of a bear run as well. So something to look out for. Now, someone wanted to see Monero. I couldn't remember if it was XEM or XMR, so we're going to look at both. Here is the first one. This is XEM. All right, and this one, you can see hit a new weekly low, testing this bearish pointer from the week ending February the 24th of 2022. So I think south is where that one is heading. All right, the next one is the XMR. I couldn't remember which one is Monero, so we'll just pull up both of these. And this one has a crash alert to start the week off. I think this is the beginning of a bearish run here as well. All right, next up we got ZRX. Here's ZRX, starting with a crash alert to start the week off. I'm expecting sideways to slightly lower prices on this one. The bearish argument has still been in play here. This thing is kind of just like drifting sideways, but you keep having these little dips. So I think this is just going to continue to do that. Heard some about Berkshire Hathaway. This is the BRKB, new weekly low. Top of the Kumo cloud is around the $280 mark. So this one is good for maybe a $40 run to the downside. We shall see. Next up is the Illuminati Index, which is our ticker HACK. And you can see the black on the HACK. This one's looking to dangle over the edge of the cliff and could be about to fall, increasing selling, extending out. The bearish argument hasn't turned bearish on the chart yet, but it is threatening to break this chart. If this falls out of bed, it will break the chart. There will be technical damage on the weekly chart, and that looks like that we could be seeing a top in the hack. Next up, we have our Hdge, which is the bear ETF fund. So it goes up when the markets are expected to go down, and it has been flatlining for quite a while. If I flip it over to the daily, you can get a better idea. It has run from a primary rally alert since March the 30th, and it has run from $24.16 to $27.75, as you can see here. So it has been up in a way, a lot of upside production from the rally alert. That rally alert was given on April the 30th. Then you got another rally alert here on April the 5th. Then another one on April the 6th, and another one on April the 7th, and another one on April the 14th, and then another one here on April the 20th. So this thing has just been going up, 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 up with no pullback at all. That's a good question, Troy. Who determines value? We all do. Anyone who is operating in any particular given market at any given time and around a particular given price, we all determine that. So it's supply and demand. But just remember, you can't really judge another person's entry points into a market because you don't know their financial wherewithal. Everyone has a different reason for selling or buying a security. Some people could be hedging. It could be producers or manufacturers of products. It could be a hedge fund. It could be, a pension fund. It could be a whole bunch of stuff. So we don't really know why a person is buying or selling, and it doesn't matter. Everyone has needs. So that's why active traders, we add liquidity to these markets. So yeah, we determine value, all of us. As soon as you click that mouse to say buy X amount of shares or whatever, you just determined the price. All right, so here is the Russell, my hustle. Let's see here. The only real currency is human labor. Who determines what that is worth? Well, I would have to fall. I'm not an economist. I understand economics because I've read a lot of Tom Sowell's books. So I'm gonna defer to Tom on that one. When you talk about currency, labor, it can be treated as such, but labor is more so a trading thing. You're trading your time for money, and that could come in different forms in different ways. I mean, at the end of the day, everyone is selling something, whether you're selling a product or a service, everyone is selling something. If you're participating in the economy, you are selling something. You're looking to sell something. When you go to the grocery store to buy groceries, you're not just buying, you're selling, because you're going to the grocery store. You're saying, listen here, look at here. I'm selling this money. I'm willing to give this money in my pocket away. But here's what I want. Here's what I want in exchange for the money in my wallet. I'm willing to give you all the money in my wallet for this list of items on my grocery list. And the store is eager and willing to trade you its food for the money in your wallet, whether that be gold, silver, crypto, or cash. That is still that's trading is happening. Everyone's a trader, whether they realize it or not. You can say, well, I'm not actively in stocks or Forex or commodity futures or crypto. That may be so. Then that just means you're a trader of currency. Everyone's a Forex trader, whether they want to realize it or not. We all trade Forex. You exchange your money for a product or service on a daily basis. When you put gas in your car, you're trading. That's a trade. You just traded the gas station, the currency in your wallet, for its natural resource, which is the fuel that you put in your vehicle. So that's how that happened. So if you look at the Russell, you'll see here that, the Russell 2000 is kind of leading the U.S. indices in the opposite direction. Now, albeit it's been consolidating inside this Kumo cloud, and it is a wide cloud. We can see that, but it's falling out of the cloud now. So it seems to be wanting to come down and test these old supports from 2020. So we do have quite a ways down we can go. Let's see. All right, you have a point here. How fast do you type? How much do you bench press? Can you balance a chemical equation? Everyone has different skill sets. Gold is the same whether it is one atom or a kilobar. That's correct. Dirt makes a very poignant point, which is at the end of the day, gold and silver is money, right? It used to be, the saying used to be, gold and silver is money and nothing else. I loved that little snippet that Da Vinci and a few other dudes did. Remember that back in the day when they did that? Gold and silver is money and nothing else. I thought that was pretty cool. I loved it. And they were right. You know, for thousands of years, gold and silver has always been money in pretty much every economy on every continent, every language, culture, you name it. Gold and silver has been considered money. If you had gold, you were considered wealthy. If you had silver, you were wealthy. So, yeah, but times have changed, though. Gold and silver is still money. No matter what the Fed says, it's still money, but other things are money too. You know what I mean? Like at the end of the day, Bitcoin right now is still infinitely more expensive than an ounce of gold. You know what I mean? So look at it that way. Even a pound of gold is still cheaper than one Bitcoin. One Bitcoin is still worth more than a pound of gold. Not an ounce of gold, a pound of gold. So per pound, Bitcoin is more expensive than gold. You know what I'm saying? So, you know, and I know it's not necessarily comparing apples to apples, but apples to oranges rather. But, you know, we can't ignore that reality either. The digital reality is here, whether we like it or not. You know, in my opinion, you know, fiat is never going to go away anywhere. It's just being converted into a digital asset now. So they'll probably peg it to some type of, you know, crypto, whatever. And we understand that. But it doesn't mean that, you know, gold and silver still also won't have digital value placed on it too. You know what I mean? There's still machines that exist in the world where you can put in a fiat currency and get out a physical gold or silver bar or coin. Those still exist. So we can't ignore, you know, that gold and silver is not money, because countries like China and India, they've been buying up gold for the longest time. So it obviously still holds that intrinsic value as a currency as well as a commodity, because it has alternative uses too. I don't have to just spend my gold to buy things. I can also turn my gold into jewelry and wear it around my neck, or wear it on my fingers, or wear it around my ankles, or wear it on my toes. You know what I mean? It has a bunch of, you put it in your ears, put it in your nose, put it in your lip, put it in your cheeks, you know? So gold and silver still has alternative uses and is still considered valuable. Bitcoin doesn't really have any intrinsic value. So believe it or not, cryptos are a type of fiat. They're not fiat in the organic sense, but they are a type of fiat in that a fiat is only valuable as people believe it to be. All right, it's arbitrary. Gold and silver is not arbitrary. Everyone knows that gold and silver has value and valuable alternative uses as well. So it is what it is, you know? Okay. Let's see here. Yeah, you on a roll, Troy. If I give you some of my time to dig a hole you really need, how much will you pay me? That's a good point. You know, at the end of the day, man, it all goes back to barter. You know what I'm saying? That's why fiat was put out there, to make the means of exchange a lot more fluid and a lot easier. Because under the organic bartering system, you would have to find someone who was willing to barter with you, and it would often be a mismatch. You may want something they have, but they may not want anything you have. And so it would break down commerce. Fiat was created to keep commerce flowing, you know, and only an idiot would lock down a global economy over a flu or a sneeze or a sniffle or a cough. But I digress. All right, this right here is the real estate. Now, this is IYR. You want to watch this one. This one tends to move opposite all other housing type stocks. This commercial real estate REIT is a powerful one. So definitely something to watch if you like retail, you like to follow, I'm sorry, I keep saying retail. If you like to follow, housing starts and home builders, things of that nature, IYR is very resilient. It does have its, dips and pullbacks, which give you buying opportunities, as you see here. So this is one to watch, definitely one to watch. Okay, we're almost done here. All right, we've got two more left. Here's Microsoft. All right, so Microsoft now has a baby bear. Here's a little koala, cute little koala bear here. All right, increasing selling pressure on the back of rising buying. So someone is willing to defend Microsoft at the bottom of the Kumo cloud. It came down, but look at the spike. We have a bearish pointer, do we not? Is that not a bearish pointer? Well, of course it is. And right now, this pointer is saying that the market is going to try to rally at some point. We may drop first, but because of this increasing selling here, but this is showing us that the market is trying to get something going. It wants to pop back out of the cloud, but it's under this black fog of a correction. So a new leg down is being built here. So Microsoft is definitely something to watch. Okay, here's Netflix. You heard about Netflix, what's been happening with Netflix. Well, the chart is saying it agrees with that. Look at the leg. So we put in this first leg down, sideways, another leg down, only took a 1 week hiatus, then just gave it up, then took a little hiatus, and then came down, then said, okay, we'll take a break, and then said psych, and then gave it all. Look how it just gave it up, man. Just devastating price action. This market has fallen from $700 a share down to $190 a share in the brief period of time of October the 29th of 2001 till now. That is scary if you own Netflix. All right, so no, we did not cover the silver miners. You want to see AG? I'll pull that up for you. Not a problem. I got you. Let's see here. AG. First Majestic. The GOAT of mining stocks. All right, so as you can see here with the AG on the weekly, you got a new weekly low and a crash alert to start the week off. Increasing selling momentum as well. Nothing down here to attract the price. So it's falling off the cliff, which means it could fall pretty low. And this is just the beginning of the bear. Let me go ahead and give you the benefit of the doubt with a daily view. The daily view is not much better. Yeah, this correction is really starting to accelerate. People are headed toward the exit. Okay, on the daily, we do have a possible probable. I think the market wants to test this old support from January the 28th. All right, so, and that's not too far down. It may look like it, but it's not. This low is at $9.28. So and you closed at 10.30. So that's not a whole. That's $1 to the downside, And while we're on the whole subject of miners, let's go ahead and take a look at SIL, which is the silver mining ETF, and see what's what. Maybe it'll give a better picture because that First Majestic is not looking good. All right, so you were in the green on the screen. You were in that bullish zone for a minute. And now you've crossed over to the bearish zone. You got a little baby koala bear right here looking all cute and cuddly, saying, "Rawr." It's trying to roar. It's trying to say it wants to do something to you. And you can see the start of a correction coming. And this one is not a really expensive stock. It's a $32 stock, but it's threatening to drop back down to around 15 to test this old low from March the 20th of 2000. So yeah, man, not looking a whole lot better on that front. Let's see if GDX and GDXJ can give us a little bit better guidance, maybe. Sometimes the silver miners can get a bump in the arm from the gold mining stocks rallying a little bit. All right, let's see what happens. Well, okay, on this one, unfortunately, on the weekly chart, you do have the beginning of a down leg as well. We have started the week off with a crash alert. Looks like this one is threatening to drop below the Kumo cloud. That would make this stock drop below $33 a share. Yeah, we did Litecoin already, IT. You missed it. So, and we're about to wrap up. So when we're done, just rewind it and you'll be able to check that out. Yeah, GDX right now, it's the beginning, the beginning of the end. In other words, what happened was you had this run up here, right? And it was doing good. It was locking in. You knew that the price was going to be attracted to this bullish pointer, and that's exactly what happened. It took it out on this bar here, but then on the preceding week, then the following week, the market went ahead and took this high out, and then just gave up the ghost. And this is not a pointer bar. This is the end all bar. This bar ends the bullish run. This bar ends this rally that started from the week of February the 4th. And then you gap down, you just gap down this prior week, and you didn't have back and fill the gap. So either the market's going to try to bump here and see if the bulls can defend the top of the Kumo cloud and let the market back and fill first, or is it just going to collapse and go lower? And this is the beginning of crossing over into the red zone. And unfortunately, that's what's up. Okay, let's see here. Look for gold 1855, 1835. Yeah, absolutely, man. Gold is looking nasty. Gold is it's not looking good. It's looking nasty. Thanks for the props, Dirk. I appreciate the love, my man. But yeah, did we look at physical gold and physical silver? We didn't, did we? Okay, let's do that. Let's look at physical gold and physical silver. Just so I can show you what Dirk just mentioned. Let me show you why I believe that what he's saying has some validity to it. And let's just take a look at the gold and the silver futures, and I think that will explain the actual trajectory. Okay, so here we are. The first one here is the silver futures. And you can see here, silver is already dropping. You close at $23.29. And unfortunately, you are below the Kumo cloud. And this is week one of a new down leg that is forming in the silver. And unfortunately, I think the market wants to test 2020. I think it wants to come out and test the low support made from March the 20th of 2020, when this market hit $11.73. I know that's not good news. I know you don't want to hear it, but I'm not going to leave you like that. I have something good for you. I got some good news for you. Yes, I believe the market's going to drop down to this $11 level and make people puke and say, I hate metals. They're going to want to run to APMEX and sell them all their silver. They're going to want to get rid of all their silver, the sterling silver chain that your girlfriend bought you back in 7th grade when sterling silver chains was the thing. You're going to go ahead, you're going to sell it. You say I have nothing to live for as far as holding silver. I'm getting rid of it, right? It's going to come down here. It's going to take out $11.73, but it's not going to live there. It's going to do it, and then it's going to do something else. It's going to explode. You know why it's going to explode? Because of this bearish pointer right here made the week of February the 5th of 2021. Let's go ahead and make that a little bit bigger. Ladies and gentlemen, class, please. Does anyone want to raise their hand and say what this is? Yes, you are all correct. It is a bullish pointer. Has it ever been reconciled, tested, or taken out? The answer is no. So, when we go low to the bullish pointer, we will go. Once again, once the market goes low, back to the bullish pointer, it will go. So first the crash, then the flash. All right. So you're gonna puke when we get to the top of the roller coaster, before it plummets down at 110 miles an hour with 15 G forces, putting your stomach up into your throat. Okay. But then once it hits that last throw right there, that last through point, and it goes back up, you're going to be really happy because it's going to go up with twice the intensity that it crashes. So in the short term, let me just reemphasize, in the short term, I think silver wants to crash first, because the rule of market momentum 101, before they bubble something, they have to smash it first. All right. You don't blow up an already blown up balloon, right? When you blow up a balloon, it's flat, it's empty, right? Well, there you go. So they gotta smash all the air out of it, and then they're gonna let it rock. They're gonna let it really rock, because at some point the reality of the economic interest rate and hyperinflationary concerns will allow these markets to rock and roll. Okay, our last chart of the day is gold futures. And as you can see here, gold futures is looking a little similar to the silver, but a little different. Okay, so the reason why I think that the down is coming before the up is because gold has more rally points than silver does. All right, let's just examine them. So you have this bearish pointer from the week ending in August the 13th of 2021, right? Then you have another one here ending the week of March the 12th of 2021, right? Then you have a key support on this bar right here, which is, there's that same date again, the week ending of March the 20th of 2020. And this will take gold down to the $1,452.10 level. I think the market wants to fall. It wants to shock. It wants to make people hate gold. It wants to make them rue the day that they ever bought their first gold coin. It wants to make them take their gold bars and throw it up against the wall, throw it outside the window, run over it with their car, play fetch with their dog with it, whatever. Okay, that would be a mistake, ladies and gentlemen, because they have to crash this thing in order to rock this thing. And here we go. Here is my good news to you in gold. After gold is destroyed down here at the $1,400 level, then it will have to come back up to the bullish pointer that was created the week of August the 7th of 2020. That is a bullish pointer at $2,063 an ounce. The following week, the market fell to test or even try to take it out. Never been back to reconcile that bullish pointer. The second one is the most major one, and that is the one ending the week of April the 11th of 2022. That has a spike high of $2,072 a barrel. So the chartists will say, ooh, double top means a drop. Double top means a drop. Yes, this is a double top per se, because you had a stronger close here than you had here, even though this high on this bar is higher than this bar, right? So the market's giving you the okie dokie, all right, the rope-a-dope. You see the market top, double top, and then it's falling, right? The market's going to fall with you. It's going to put you in the headlock, and it's going to fall with you. It's going to DDT you in the concrete, right? And then once you're unconscious, once gold hits the $1,400 handle, people will be unconscious from the DDT, and then all of a sudden they're going to projectile this thing right back up, and it's going to take out the 2,000 handle. $2,000.72 will not be the high. I think the high will be thousands of points higher than that. And that's what's going to happen. But in the short term, got to drop. Yeah, that is true. Troy makes a good point in the live chat. And so does Dirt. Dirt says gold is the money of kings, silver is the money of gentlemen. Yes. And then Troy says the Bible says they will be throwing gold and silver into the street. Yes, that is 100% correct. God's word said it, and so it will be. But that's a longer ways out. I think that's going to happen when the big crash comes. There's a big crash in gold and silver during that historic moment, or should I say futuristic moment, because gold and silver is going to be through the roof, and people are going to be sending their kids to college with it. And then at some point, for whatever reason, it becomes worthless. Not because it's not still a commodity with alternative uses, but because the economies of the global economy is going to become so overheated. It's going to be party time. Imagine a worldwide party when pretty much just about everybody is rich. I know it's hard to imagine, but a day is going to come where prosperity won't just be, peppered and sprinkled on a few. It's going to be wide reaching. A lot of third world countries will become first world countries, and everyone's going to be, getting rich. Okay. A day of prosperity like no one has ever seen before is coming. I believe that during the time that gold is considered worthless will be once gold and silver is taken off of the COMEX and put on the blockchain. All right. Let that sink in. At some point, gold and silver will be put on the blockchain. There will be a gold and silver crypto. It will be, I don't know what they're going to call it, but it's going to be a gold and silver crypto. And it's going to die a death that it will be a death of, how do I want to say this? What do you call it? Neglect. Maybe that's the word. At the point that you're referring to in the future is going to be a time of neglect, because digital assets will be gathering so much momentum and people will be getting wealthy off of the metaverse reality at that point. There's going to be so much metaverse stuff happening. There's going to be so much virtual reality, virtual everything. There's going to be, let me put it this way. Okay, so I know some of you are really young, so you won't be able to relate to what I'm about to say. But what I'm saying to you is it's analogous to when my generation was that last generation that had one foot in the old world and a foot in the new world. Okay. We saw the Industrial Revolution and the old way of business. We remember the telephone booths and the rotary dial telephones. Okay. There was no cell phones. There was no internet. There was no iPhones. Okay. We didn't have Xbox and PlayStation. None of that stuff existed. Okay. But what did you see with the turn of each century and each decade? Well, you saw some things happening. See, my generation was the generation that saw the death of the industrial age, the old age, and the birth of the technological digital age. See, you guys weren't alive when that happened. I remember the day that it happened. See, there was a time, ladies and gentlemen, where stocks were traded in fractions. There were no decimals. It was all fractions. But something happened. Something happened when they converted stocks into decimals. All right? That happened, ladies and gentlemen. And it happened at the turn of the century. All right? As soon as 2000 hit, a lot of changes started coming rapidly. They said, okay, stocks are now going to be traded in decimals. They even got so happy that they made a thing called single stock futures. Single stock futures. And they had a vision in one Chicago that these that you will be able to trade futures on individual stocks. It was the US's answer to CMDs overseas in Europe, contracts for difference. So what happened was they said, okay, well, we're going to roll this out on the Dow 30 first. So you had single stock futures on Microsoft, obviously, and like IBM and some other, the Dow 30, the blue chips. Well, it didn't take off. They didn't get the volume that they were hoping for. They were hoping that this was going to revolutionize things, but it didn't. It failed. So the whole program got pulled. That's why you don't see single stock futures anymore. All right. People they were addicted to the E-mini S&P 500, the E-mini Nasdaq 100, and the mini Dow futures. That's what they were in love with. Okay. So those got all the volume. All right. And people ignored everything else. So we saw that transformation. We saw the office transform from a typewriter on your desk. Every desk had a typewriter. All right. That was your computer, was your typewriter. All right. And we saw the typewriter go into the closet one day. And imagine coming to work the next day and the typewriter's not there. You're like, where's my typewriter? How am I supposed to do any work? And then they put this plastic contraption on your desk. And they say, this is a word processor. And you're like, what? A word processor? Yes, a word processor. So the word processor took the place of the typewriter. And the word processor came in different versions. You had I remember when the computer program, the hardware Wang came out, W-A-N-G. Wang was like the go-to word processing computer to have. It was not like the computer today. They had floppy disks. This is the time of the floppy disk. And then you had Word Star and Word Perfect. All right, the Word Perfect was the competitor to the Wang. Now you had to learn to program in Wang. All right, you had to literally learn the language of Wang in order to use the Wang. You just didn't hop on it and start typing. You had to learn the language. And then, Word Star and Word Perfect were gaining market share to the point where Wang went the way of the beta. And people said, nah, you got to have Word Perfect and Word Star, which is the VHS of word processors. And the jobs that were created at that time were data entry jobs. You had word processing and you had data entry. The word processors were paid more than the data entry people. The data entry people were your frontline fry cooks and burger flippers. They were the McDonald's frontline of the white collar, white office job. So if you could type, 60 words a minute or 120 words a minute, then you were pretty much guaranteed a job off the bat with no experience. If you knew the language of Wang and you knew Word Star and Word Perfect and Lotus, which also came in the scene at that time, that Lotus, then you was able to do a little something. All right. And people respected you. Now, at this time, there was a fork in the road. There was a crossroad, if you will. Now, the people who just had a high school diploma and no additional training or education, they went the way of data entry specialists. So you were a data entry specialist. The individuals who were in class and going to school to learn computer programming went the way of the word processors, okay? Because someone had to program these computers. They would glitch out and act crazy all the time. Someone had to program the thing and fix it and recode it. So that was the thing. But then something else came along a few years later. The 80s are gone now. 1989 is the year I'm referring to, and now 89 is gone. Okay, the AIDS panic has died down a lot. People are starting to understand it now. The whole word data entry thing is starting to change, and now people need to learn computer language. So now enters Microsoft. And Microsoft had a thing. You had to, if you knew how to program the Microsoft language and all that stuff, then you were considered the man. You could go and get a job making $60,000 a year. I think the bottom was 40, and then it went to like 60. And then after that, things started moving rapidly. Then people started learning C+ and C++, and then and then Java came, and we got to learn Java now, and Python, and all these other computer languages came, and these new software programs and hardware was rapidly changing. What you young people don't know is that a laptop back then, when they first came out, they were like $10,000, $15,000. And they had as much processing speed as an egg. So you guys don't know nothing about it. Took 20 minutes to a half an hour to turn on your computer. What y'all know about that? Who remembers when it took 20, 30 minutes to turn on a laptop or turn on a desktop, any kind of computer, especially the joints from them floppy disks. Y'all know what I'm talking about. Took forever for your computer to boot up. Okay. That's how things were, and every day, every week, every month, a new software program was coming out, a new computer was coming out, and a new language, and and people had to keep going back to school for their Microsoft certifications, because every time a new Microsoft product came out, there was a new thing to learn, and it was just ridiculous. But there were people that were making $400,000, $500,000 a year doing that. Okay, so if you were a programmer, you hit the lottery. Now the lucky people, I was supposed to have been one of those lucky people, but I got distracted. I was a young idiot. I could have been one of those Microsoft millionaires, who went to work at Microsoft, but instead of doing what I was supposed to do, I didn't. I did something stupid, so I didn't go that route. And people I went to school with, I saw them go that route, and they was getting broke off. So my walk was different. But I watched as time went on. Then I learned another dark secret. All those data entry jobs and word processing jobs, when we're typing all day and night into a quote unquote database, whatever this database thing was, well, that's when we found out later on, after the fact, that we were building the internet. We were keying all the information that you search now and enjoy. We keyed it in for you. All right. So you have the class of 1987, class of 88, and class of 89 to thank for the internet, because we helped build it. All those data entry jobs, that's what that was. Putting in all types of information. Another thing that helped to spearhead the whole internet revolution as it was coming was with the asbestos scare. Remember the asbestos scare? All right. So in 89, the government was giving out federal contracts like candy, like they were passing them out like M&Ms. And if you were willing to carry the load with this whole asbestos thing, then the government was breaking you off proper. You was getting these nice contracts. And that's what we worked on. I was one of the lucky people that got a chance to work on that whole asbestos thing, where they were removing asbestos in every government building, every school in the country, and every house in the country. Asbestos was being removed, and it was crazy. It was chaotic. So we've seen the transformation of America when the technological age started to take off. There was something about the late 80s that kicked all of that off. 89 was a very pivotal year for computers and, things jumping off the way that we didn't know. And remember, there was no online trading. There was no internet. There was no iPhone. If you wanted to trade wheat, soybeans, or a share of stock, you had to pick up the telephone, call your broker, and say, buy me whatever. All right. And then hope and pray that you could get your broker on the phone when things started getting chaotic. It was an impossible way to trade. I mean, you literally had to get your broker on the phone. And sometimes you'd be on the phone for 45 minutes to an hour on hold waiting to speak to your broker, only to get a voicemail or a person come on the line and say, sorry, he's in a meeting or he's out of the office, after you've been holding for an hour and the market has been moving against you, something terrible. Or you've seen a situation that you want to take advantage of and you want to get in the market and you can't. You can't. And if you got your face ripped off in the market and you want to talk to your broker about it, he's ducking you and avoiding your calls. Yeah, it was frustrating times back then. Very frustrating. Mr. Livingston had it way better dealing with the bucket shops, because at least he could, all you had to do is just walk in. But in the 80s, you had to pick the phone up and call somebody. Unless you live local, you can just walk in, or you had a seat at the exchange or what have you. But other than that, it was rough. So what I'm saying is, I say all that to say that this evolution is happening again. There's another metamorphosis happening as we speak. There is a silent metamorphosis happening where everything, the world as you know it, is being transitioned over into this digitized metaverse, artificial intelligence, simulated reality world. And that's where everything's going to be housed in the future. And that is when I believe that gold and silver will just fall out of favor. People will just won't pay attention to it, because why should they, when they became millionaires and billionaires and trillionaires off of Bitcoin and Litecoin and Ethereum and whatever else at that time? There'll be no need to stack gold, because now gold is no longer a physical thing. It's a crypto thing. They're going to change that. You mark my words. It's going to be weird. And at that point in time, the world will say, we have no more use for gold and silver as far as, monetarily. Commercially, it still serves a purpose. But as far as buying a loaf of bread with it, no one will want to, because what would be the point? It's just weird. It's hard to put into words, but just mark my words that day is fastly approaching. Okay, it's quickly approaching. All right, with that said, I think we have done the subject justice. I think this evening is going to be interesting. I still haven't made up my mind yet on what I'm going to do with the Russell, the Nasdaq, the Dow, oil, gold, and silver tonight. I'll think about what I'm going to do, and then at that point, I'll update. I may wait until when I'm about to go to bed tonight, or I may wait until I get up in the morning. I don't know. I just need to do a little bit more digging. So we'll see what's up. But dark days are ahead first. I'm sorry. That's it. The gist of this whole talk today, this whole pre-market Pulsewave report, the gist of it is dark days are ahead first. Then the party starts. But not until the darkness comes first. All right? I hate to be the bearer of bad news, but I'm sorry. Darkness is coming first. We got a lot of bearish pointers way back down there that need to be reconciled. We got, hyperinflationary aspects coming into play in the economy. We have food shortages, everything shortages, just a lot going on. And unfortunately, it's going to take a lot to work through that. I think a lot of things have to happen. And until those things happen, I don't think that I don't think there's going to be any peaceful or ratified solutions that come easily or quickly, for that matter, until some minor things and some major things too get worked out. And don't forget too, we still are not out of the woods with the war. I think that the foundation, like I said to you guys before Russia invaded, I said I believed that in 2022, the foundations will be laid for World War III, which is still a possibility. All right. So before we go into an age of extreme prosperity, I think first we go into an age of chaos. So take that for what it's worth. What do I know? I could be very wrong on all of this, but in my bones, I don't think that I am. I don't think I am. And that's going to suck for a lot of people. Okay. All right, then. So with that being said, y'all know what it is. Smash the like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And remember, you got to use your stops. Don't trade without stops. Please don't trade without stops. And also, you know, as soon as you get these reports, that's when you're supposed to put your orders in. All right. You always want to either, you know, be long or short the market at any given time. If you watch the trade journal I did before I did this video, I showed you where I was already in the market in crypto and Forex. I've yet to do anything in the futures yet, but I'm going to. I never just sit on the side and let the market happen. That's what we got the pulse waves for. So I just haven't decided which trades I'm going to do. I'm still examining, but as soon as I know, you guys will know, and I'll do an update. All right, it is what it is, man. Love you guys, and all my pulse waves out there. See you guys in the trade room. Peace.